So Truworths is next. Big group locally, done a lot of heavy lifting over the years. Michael Mark, CEO, head of the whole thing. Couple of brands in there. Market cap has grown after the acquisition of a big UK operation, the Office Group, to 36.67 billion rand. Price to earnings ratio also low at 12.62. Dividend yield solid, 5.5%. But it's the same thing, really, isn't it?
Yes.
It's the concerns about, credit extension and the economy and people's mood, which I don't know, isn't quite yet totally depressed.
Sure.
But it could get there if things get more ragged in terms of our local politics.
Yeah, I mean, it's a fluid situation at the moment. So to make investment decisions, trying to look through that uncertainty is difficult at the moment. But we've got to ask the question, what do we think the consumer is going to look like in the next 6-12 months and beyond there? And the signs are it's not good. So credit extension, affordability legislation is going to impact a credit retailer like Truworths.
Well, on that, I know the Truworths Group's been very vocal about this because the new rules basically make it very difficult to give somebody a new account.
Yes.
Because you've got to get 3 months worth of this and 3 months worth of that, salary statements, bank, and it just locks everybody up. When these big groups basically say that's nonsense, because the best way to test whether someone can afford a loan is to give them a small one. And then if they don't service their responsibilities, you don't give them any more. That's much better than trying to make a decision based on the statements and so on and so forth.
Yeah, look, bottom line, they took a hit in terms of their earnings with this legislation that came in. They are also, grappling with this integration of the Office acquisition. I mean, that was big for them. They are trying to extract certain efficiencies.
So that's mostly a footwear-oriented store in the UK with about 160 outlets.
Yeah, about 160.
The timing of the purchase wasn't great because it cost them quite a lot. Then the pound strengthened, rand, it just kind of was unfortunate.
Yeah, and they were kind of late to the party in going offshore, when there'd been a big move to having these international acquisitions. So the timing didn't work for them. I quite like what it could do for the group, but they've really got to extract the value there. And
it could be better now, given that the rand has weakened a bit. Let's go to the share chart. That looks a bit raggedy, which is a reflection of how we've seen it trade, with anxieties that maybe... Also, the competitive issue shouldn't be understated, because brands like Truworths really position themselves at the professional... new, upwardly mobile, urban professional market.
Yes.
And that's fantastic, but it's not as though there isn't any space. I mean, there's a lot of competition in exactly that target market, so people have got choices.
It's hotly contested. I mean, everyone's competing for the share of wallet there. And, that consumer in that echelon is coming under a bit more pressure than they've been for a few years. So, a few headwinds for the company.
So if other investors are going to take a wait-and-see attitude, I'm afraid that's probably going to mean the share price is going to go sideways. So no real rush to buy them now.
I don't think so. Valuation's starting to look like it should, but no rush to buy, and a lot of headwinds in the short term that I'm seeing.
And entirely Southern African focused, largely anyway. Okay, good. Well, apart from the Office thing, sorry. That's it. Not hot on Truworths. Getting caught up on my own words here.